Hey, good morning. This is May Valensky with Driving Markets. Driving while talking about markets. Anything said in this piece is an opinion only. So Friday, McCarthy walked out of the White House on Biden with no deal as far as the debt ceiling is concerned. This is significant because what it means that the clock is ticking towards a default. Now remember, the Republicans and the Democrats are at loggerheads. The reason why they're at loggerheads is quite simple. Democrats want to maintain or increase spending, public spending, and the Republicans want to cut back in order to make the economy more efficient. Now, the Republicans also at fault because they give huge tax breaks to billionaires, which is agitating a lot of people. The Democrats are giving huge benefits out in terms of social benefits and not really building the infrastructure, and therefore productivity is dropped. So that particular battle is what's causing the lack of agreement on the debt ceiling. And if this debt ceiling is not increased by the 1st of June, or beginning of June, let's be more specific, then effectively what's going to happen is the US is going to go into default. By going into default, to recap, you're going to have a lower credit rating, you're going to have a drop in the dollar and a drop in equity markets, rising gold, rising treasuries. Now, talking about gold and treasuries, they are a natural safe haven. The 10-year treasury at the moment is yielding 3.70%, jumped up from previous weeks where it was down to 3.38, 3.42, indicating again that there is a crisis bubbling along. Now, gold is also a particular safe haven, and there are views by analysts that we're going back to a stagflation of where we were in 1970s. Those who are far too young to remember 1970s, we have stagflation with rising prices, no growth, and lack of real government control, or lack of stable government, and that sent the economy into a downward spiral. Gold went up at that particular time by 16-fold. It's unlikely gold's going to go up again 16-fold as a result of where the crisis that we're about to go into, but gold is pretty much a solid investment. In fact, in America they did a survey where people are investing now, and there's more people now investing in gold than in the last 20 years. So gold has become definitely a prime safe haven, which brings me on to Bitcoin. Now, Bitcoin is not a natural safe haven. It's very volatile. However, Bitcoin has certain characteristics that are similar to gold. Number one, it's limited in supply. There's only 22 million or 23 million coins around. It's very popular, and the thing about Bitcoin, there's no intermediary or middleman as regards the movement of that particular asset. It's peer-to-peer, it's direct-to-direct, it's owner-to-owner. It's nothing to do with any intermediary. So it's got none of the fractional banking reserve system, it's got none of the intermediary system, it's got no government control, it's got no government input. It's totally independent. Remember, gold could be seized or frozen by the authorities, where Bitcoin could not. Now, I'm not a massive fan of Bitcoin, but I can't actually remove myself from being objective and looking at it as a potential asset. The problem is with Bitcoin is the volatility, and that either frightens a lot of people or makes them lose a lot of money, simply because they come in, and because the volatility, where it could move 10, 20, 30% in a month, where people were then offloaded at the dip, realizing losses and then getting burnt on it. But if you hold on to it longer term, there is a very good possibility that Bitcoin could go much higher and become one of the alternatives to banking system. If we do go into the 1970s banking crisis style, or economy crisis, then you will be looking at avoiding banking. So Bitcoin is the medium to be used when it comes to avoiding banking or credit card systems. Something that you would not expect to hear from me, but it could be a long-term bet. So those of you who are Bitcoin holders and are Bitcoin bulls, to hear from Mayor Valensky on Driving Markets that Bitcoin could be a potential is a new one, but I'm being objective and I'm trying to be as neutral as possible. Markets fell on Friday slightly because of the lack of debt ceiling agreement. The dollar was up, interestingly enough, The dollar last week was stronger against the pound, the yen and the euro. However, if this debt ceiling is not solved, then you're going to end up seeing the dollar actually going south, as well as equity markets. Interestingly enough, also the DAX is at an all-time high, looking to me as an obvious sell at this level. I can't see any justification why the DAX is at an all-time high, but it looks resilient there, and to me that's again, it's overbought and it needs to be sold off, or will be sold off, as profit takers will come in. Anything reaching a peak in this particular economic environment looks like a sell. We are going into recession. We are in a recession, but not official recession. Coming on towards the end of the year, you'll see a official recession take place in the US, Canada and Europe and in the UK. Jerome Powell spoke on Friday, gave his speech, indicated that interest rates are not going to go up in June. There is still a 30% chance that rates will rise. Possibility there that they may rise by 25 basis points. Not too sure which direction that's going to go in. My personal gut feeling is they're not going to raise rates, but you can't discount it as far as the Fed is concerned when it comes to interest rates. Also looking at Apple and Microsoft and looking at Meta and Facebook, they are reaching very full value as far as those shares are concerned, and there could be an opportunity there to take profits on those particular mega tech stocks as the Nasdaq bursts forward, maybe being pushed by Microsoft and Apple, which are 22.5 to 23% of the index is Apple and Microsoft. That's more or less it from Mayor Valensky Driving Markets. You can subscribe, share, comment. More than happy to hear from you. Have a good day.